we're going to get good news in October, which I don't think is consensus. And that would mean you probably have an ETF actually trading by early December.
Bitcoin billionaire and Wall Street insider, hedge fund legend, Mike Novogratz is implying that he knows we're going to get good news around the Bitcoin ETF in October. And that just so happens to line up with the most profitable time for Bitcoin ever in the world, which is Q4. But that's not all. We actually have a monstrous amount of swirling positive catalysts for Bitcoin that are clearly not being factored in on the price. We're going to go through why I believe October could mark the beginning of a pivot point into the next year of bullishness for Bitcoin, but most importantly, the end to some of the misery of the bear market, at least hopefully here. First, let's hear what Mike Novogratz has to say.
And that would mean you probably have an ETF actually trading by early December. I don't think people understand how important it is. And so, Invesco, who's our partner in this, we want to win, right? But Kathy Wu wants to win, BlackRock wants to win, Fidelity wants to win. There are probably 7 or 8 credible competitors that I think will launch the same day. And so you step back, while we want to win, we also want Bitcoin to go higher. And think of the sales forces. You've got BlackRock sales force, Invesco sales force, ARK sales force, Fidelity sales force. So you have an entire new group of people picking up the phone, because Bitcoin is always sold, it's never bought. One thing I learned starting in 2013 when I had to explain what the damn Byzantine general's problem was to people to kind of get them to buy Bitcoin. Now it's a macro asset. And so I think this is a complete game changer. Prices are always set on the margin, right? There are not a lot of sellers. Right now, there are not a lot of buyers or sellers, right? We have very low liquidity in these markets. But you're going to start seeing buyers, and they're not going to buy and sell right away. So you're going to suck up a lot of supply, and prices are going to go a lot higher.
Good news in October, an ETF trading by December, and the marketing forces of BlackRock, Invesco, ARK Invest, Galaxy Digital, you name it, all out there beating the drum, bringing not short-term flippers and degen traders, but long-term accumulators into the Bitcoin supply. And this is as Bitcoin once again has the lowest amount of short-term speculators that it's ever had, lower than the 2017 bull run or the 2021 bull run. So you could keep pretending like this time is different. You could say, hey, look, the macro this, the macro that. When it comes down to it, sellers are exhausted. And while we could go lower, the reality is that most people who are going to panic and sell during this bear market have probably done so. Bitcoin is trading on razor thin books, the thinnest they've ever been, which means that big activity to the downside or the upside could have a massive impact on this market. And let's read the tea leaves even a little deeper here, because we know BlackRock are the kings of ESG, environmental social governance. But check this out. Bitcoin miners have doubled down on their efficiency of late and are now considered over 50% environmentally friendly clean energy. Bitcoin mining is quickly rewriting its narrative to be good for energy efficiency, to be good for the environment. And this is all as good old Larry Fink of BlackRock and Vanguard, who were once ESG's biggest proponents, now seem to be reversing course. And they're doing this by unwinding a lot of the language that they were using for these ESG funds, right as they're pushing Bitcoin. You see how they tend to clear the way just in time for their products to come to market. And if there's anything that's an indicator of a time to buy, check this out. We have a new report that Ethereum has been disappointing since the Shanghai upgrade, and this is from JP Morgan. Now, what's so important about JP Morgan? Well, it just so happens that they might have released a ton of damning and hostile and horrific reports on the entire crypto ecosystem throughout 2018 and 2019. But it was also revealed that during these times, they were actively buying into Bitcoin.
On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks, people listen. People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says he'll fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
So was JP Morgan this time our knight in shining armor, coming to save us from the horrors of Ethereum? Or are we once again getting played by the big boys, fudded to see the price drop at a weak point in the charts right before they come in with their institutional products that are going to send the price up dramatically? Not to mention the yield curve control, the treasury buyback plan of debt that is effectively huffing our own gas to refinance our debt lower, to keep interest rates artificially low by effectively printing money. We know how this game goes. This, my friends, is stimulus. This is quantitative easing by another name. Make no mistake. This is stimmy, and it's coming in 2024. Mind you, an election year, which are always some of the most bullish years in the markets. Why? Because we know that running against a bad economy is the surefire way to get kicked out of office. So nobody wants to lose. They will pump the bags. That is just a fact. You have an election year, you have an ETF, you have the halving, you have debt buybacks coming in to play. And I find very interesting, you have a massive slowing of the world's biggest economy and millionaire exodus from China, which has apparently a lot of capital flight leaving China. And according to Arthur Hayes, either people are buying a lot of gold, they're paying down debts, or some wealthy comrades are fleeing the coop. Most likely, it's a mix of all three of these things. And if you're buying gold to escape the capital controls of China, well, I can think of something way better than gold to escape capital controls with. And you know where I'm going with this. When US Treasury yields rise, no cash flow, long duration assets like gold and Bitcoin should dump, but they haven't dumped that much over this explosive rise in treasuries. Yields are rising due to inflation, not growth. It's not the growth that is stimulating this type of rise in yields, which means that people will store their wealth and look for hard assets like Bitcoin and gold to escape the inflationary headwinds. But it gets even better. I'm going to share with you exactly how I'm playing this, and I'm using something that's called a barbell strategy. I didn't create this image, but you can see a barbell is pretty well understood, as you have on the left something super safe like cash or treasury bonds, short-term treasury notes, and on the right, you have risky stuff, right? For me, the right side is all cryptocurrency. On the left side, I have treasuries yielding myself a nice juicy over 5% cash on cash yield. Now, within my crypto portfolio, I also have another barbell, which is why I call this the double barbell. On the left, I have Bitcoin and Ethereum, which occupies the majority of my portfolio. And on the right, I have the risky stuff, the stuff that could go, what I say, infinity or zero. And I keep that, and I'm about under 20% of my portfolio in this side of the barbell right now. And that's because we're still in these shaky market times where low cap alts can drop aggressively. But as soon as we get a nice move in Bitcoin, a sturdier move into those 30,000s, I mean, Bitcoin's playing these big ranges here. You see that we had this ultimate low that we made back in November around the FTX news. And then we've been mostly in this channel here with a few deviations. Look, once we break above sort of this 30,000, we'll have another channel because there's a ton of resistance over here around 37,000. But once we get sustainably above this 37,000, that's when I'll be looking to add a lot more risk to low caps, because I believe that their chance of then revisiting and having horrific crashes is going to be significantly less. My goal right now is to stack up the big boys, which once they start swelling up in price, you know, Bitcoin closer to 50,000, Ethereum closer to 2,000-3,000, I want to take most of my bear market capital and grow in the big boys. And then I'll start using my low cap wins to start putting more and more Ethereum in, but only after those lower and mid caps start going. So that's when I'll start adding on to my more risky part of my crypto barbell, is as we get out of that 37K range in a sustainable way. That's when I'll think that we'll make some serious progress. Hopefully that also comes in tandem with news around the ETF. You know, as we approach the halving, things like this could all come together in one magical, mysterious Bitcoin bull soup. And that's why it's not quite a perfect time for me to give you my deep dive on alts, but I've prepared a really, really sick video that I can't wait to show you as soon as we get a little closer to it being relevant here. I might do it a little prematurely here, but the reality is that I'm very excited to start going in and talking about what I love on this channel, which is the altcoins will always be the altcoins. I know they're risky, I know they're this, I know they're that, but it's what I love, it's what I find interesting in crypto. And in the end, I gotta do what I love here. So I'm gonna start doing different kinds of content. So if you enjoy that, smash that like button. If you hate it, hit that dislike button. Show me what you feel here. I'm EllioTrades. Thanks again to NordVPN for sponsoring this video. Make sure you grab your own NordVPN with the link below. It supports the channel and I appreciate it. As always, click on this video. It's even better than the one you just watched, and I'll see you very soon on the next episode.